Good morning, this is John Piper with the weekend video clip and also part one of this month's Technical Trader, and it's Saturday the 7th of June. Looking at a chart of the daily FTSE, we had this peak here, sharp decline, then this triangular movement, break out of there, and now we've got this 5-wave form developing with wave 4 at the moment, so another spurt up seems definitely on the cards, and I think we're going to see new all-time highs. I mean, 6950 was the previous all-time high. I think 7000 is now quite likely. But I also think we're in this topping process I've been talking about. There's no real sign that this is a sort of true breakout. And also the markets have been in intensive care really since 2009, and that continues. We now have negative interest rates in Europe. You can't go much lower than negative interest rates. What comes next? I mean, the government's throwing everything they can at this. People are now starting to talk about deflation, which of course is true, and that's why we've got all this stimulation, is to avoid deflation, and negative pricing is going down. But it's the markets are now overvalued in my view. And I think the next shakeout, or the next move of any importance, will be to the downside. So let's have a look at this pattern in a bit more detail. Okay, here's the wave 1, a bit of a flaky shape, but never mind. ABC2, that's pretty clear. We then got three distinct parts, three distinct rallies, I should say, to the third part of the move, with the second wave here and the fourth wave here. We're now seeing entering some kind of triangular phase, so we may not see an immediate rally, but we have already got 1, 2, 3, 4, so we could see another test of at 9.8, and then one more break at the upside to complete the fifth wave. So it could remain pretty quiet. I mean, it's been fairly quiet for the last 4 weeks. In fact, I didn't do part 2 of the Technical Trader last month, mainly because nothing much to say, nothing much has been happening. Obviously I do regular reports, but I didn't look at it more extensively for that reason. But that's I think the move down there is certainly a possibility. With triangles, you're never quite sure whether triangle or not, but the fact that we have this lower high and this higher low does suggest we're seeing a triangle here. So another test of 9.8 could be a good buying opportunity coming up in the next few weeks. We now have expiry on the 14th of June, sorry, the 13th of June. Let me get this right, the 20th of June, the third Friday of the month, and it tends to be quieter action into expiry, which would support the case for the sort of sideways drift continuing. Doesn't always work out that way. We have this news on the negative interest rates. It could change movement. Obviously it's already in the market, and it created a good two-way move on the DAX. We'll look at now, in fact. Right, the DAX has now made 10,000. I also said in the last video clip on Wednesday that it would be a brief affair, that wouldn't sustain 10,000 for long, which of course is the case. We just saw this little blip up on Thursday. In fact, if you look at the count here, we've got a 1, 2, 3, 4, 5. So there's also a case here that we're going to see another failure. I mean, the market retested 10,000 pretty closely. No resolution to that. In fact, it may blip up again. Wouldn't surprise me. But I think, well, see how. I mean, obviously we see acceptance above 10,000. It stays there for longer than a few. Let's just check how long it did last. Okay, this is a 10-minute chart. You can see we had actually just 3 TPOs there. Right, I was saying that we had 3 10-minute TPOs there. So that's less than 30 minutes or thereabouts above 10,000. A bit less, in fact, to get blipping up and down below there. Then a retest yesterday. This looks pretty impulsive, no clear form. This could be an ABC, but it's undecided. So how it works out on Monday morning remains to be seen, but there could be a good trade on Monday, a good opportunity. Sometimes you'll have to go with, often you get a break one way, which tends to be false, followed by a second break the next way. But it could be a good move, the one that, if you catch the move, it could be quite solid, I think. If we start to fall away on Monday, then I would think we will probably spend the next 2 weeks below 10,000, but if we can see acceptance above it, then anything could happen. Looking now at the Dow, this is a daily chart. Any market really which is showing some signs of life and seeing more aggressive action. Also got a possible 1, 2, so this could be a third move. Had to see how it goes, but I say it's the only market at the moment that's doing this. We may, of course, other markets may join in, but the Dow looks very positive right now. Nasdaq also has been very positive. This is the long-term weekly chart going back to the peak in 2000. Had this fall from 4,008 odd down to below 1,000. Now we've got this. Well, I thought it was an ABC, but it's now accelerating, so it could be a 5-wave move. We've also got this 5-wave pattern here, suggesting this could actually terminate. But again, it needn't be. It might just be a correction we're due. So we'll look at that in a bit more detail. This is the hourly chart. You can see a 1 there, some kind of a pattern there, which could be, well, a correction. Then a 1, 2, 3, 4, 5. So there is some kind of pullback due. I think this move here is actually a 5 as well, very short term. So it's just over the last 3 days, in fact. 1, 2, correlation there. That could be a 5th, though. Again, we've gone sideways, so not totally conclusive. But again, there's a case that we can see some kind of pullback coming in. I say we've got the 2 weeks into expiry now, tend to be quieter, unless we see some kind of a breakout. Right, a quick look at the Nikkei. We saw the peak there, 5 waves up, discussed that. It could be a BC, so we could have had a 1, 2, and again we're going up here. So it may be that we're actually that's if this is all the correction we're going to see following that massive move from 10,000 to 16,000, then it's an extremely weak, feeble correction showing a lot of strength, in fact. But there is a case we're going to see another move down. Again, remains to be seen quite how that pans out, but right now looking good. Gold is currently holding to the script, which is a triangular script. There's a chart from Guy N on the newsletter, and again we've got the lower high and the higher low as we're seeing on FTSE at the moment, which is the telltale of a triangle. So this move down to here, I mean, it could in fact be over. I think this move here, that is equal to this. We're not far off it actually, but I think a move below 1200 would be a spike below 1200 in particular would be a good move. But sometimes the waves don't go all the way. Again, it remains to be seen. If we see a breakout in equity markets and to the upside, then I think gold will certainly go and retest that level down there, and then another move up to here. At that point, I had to review the situation. Finally, the currencies. On pound dollar, the decline off this peak around 170 now looks like an ABC. Although the rally's yet to achieve a huge amount, so we could see another leg down, but looks corrective at the moment. Pound euro, we saw a blip up on the negative interest rate news, unsurprisingly, but that was quickly bought in buyers of the euro, so pound blipped that down again. For now, the trend remains intact, but there is a slight concern about this big spike there. Let's see how that transpires. But at the moment, the trend is certainly up for pound against euro. It remains to be seen whether that news item has changed something on that, but at the moment, not enough to go on. Okay, that's all for today. Hope you found it interesting and useful. I'll be back with the opening report on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.